Morning, up by about 0.6%. That's a gain of 45 cents. The automaker reported profits of $3.57 a share. That beat estimates of $3.20. And revenue of $48 billion was above expectations of $47 billion. GM is also raising its full-year earnings outlook to $12 to $14 a share. That's up from $11.50 to $13.50 previously. The automaker is also increasing its free cash flow forecast, talking about a lot of good trends here. Sees pricing on North America up by 0.5%. It had seen it flat to up 0.5%. Joining us right now to talk about all of this is Paul Jacobson. He is GM CFO. And Paul, good morning.
Good morning, Becky, and thanks for having us today. It's a great day to be talking about our results today, so thanks for having us.
Yeah, I'm looking through, and every metric, you all seem to beat expectations, the best I can tell. It looks like the second quarter incentives were averaging 4.7% of the manufacturer's suggested retail price versus 6.3% for the industry. You say you're continuing to increase operating efficiency and that you expect these trends to continue into 2027 and beyond. I guess my surprise is that the stock is only up by about 0.8% at the moment. Would you expect to see more based on what you came out with today?
Well, it's still early in the day, but what I would say is these results are very consistent with what we've been doing for the last several years. Our inventory discipline, our incentive discipline, which has been below that industry average for more than 3 years, has really led to these consistent type results. So whether it's, tariffs or semiconductor challenges, et cetera, the team's really executed well, and this quarter is no different. I think the amazing thing is when you look at the cumulative effect of all of this, our first half earnings per share is 25% higher than the first half at any time in our history, and actually more than 6 out of the last 10 full years we've already recorded in the first 6 months. So this momentum is palpable, and it's something that we think is going to continue.
And yet the stock is down 6% since the last report. Is that because it's being impacted by factors that are beyond your control, let's say tariffs?
Well, I think there are a lot of macro concerns that are out there, whether it's affordability issues, higher gas prices, tariffs, the conflict in the Middle East, et cetera. And what we try to do is we try to set that aside and just make sure that we go out and execute. And again, the team did a fabulous job. We're seeing momentum in our warranty improvement. We've taken up from what we thought was going to be about $1 billion of savings this year, year over year, to $1 billion to $1.5 billion. So we're seeing good traction there. We're seeing consistent pricing and go-to-market effects. So, our full-size truck sales are up about 4%. Incentives are down, as you mentioned earlier. So our consumer has been very resilient. We've got a very broad portfolio, probably the best portfolio we've ever had in our history. And we can meet customers at all price points, and that's working really, really well for us.
Let's run through that list of concerns, and we can talk about each one of them. How is the consumer doing right now? I think you said that you were actually looking at pricing power, at least in North America. How does the consumer look from your perspective?
Yeah, our pricing has been relatively flat after we put in some model year 2026 increases at the end of last year. So it's not like we're taking a lot or raising a lot of prices. It's just been very consistent. And on the demand side, we've got a 42% market share in trucks. Truck volumes are up a little bit. We expect them to be flat for the year, but that's largely because we're coming out with the next generation of full-size trucks late this year, early next year. So as we do that model year cutover, we'll lose some production, but that's going to give us even more momentum into 2027. So I would say the consumer has been resilient in every measure that we're looking at across the portfolio.
Meaning that you have not seen changes in their preference for type of vehicle based on the average price of gasoline going up?
Not at all. We've seen that. And usually I think it takes a much longer time period before we would see any impact. But like I said, when we look across the board at our trucks, our full-size SUVs, we're selling our vehicles as fast as we can make them.
What about the tariff situation? I know that GM is seeking the refund of about $500 million in tariffs once the judgment came through, the judge's ruling came through on some of these things. But I think you still anticipate that tariffs will impact you by $2.5 to $3.5 billion for this year. Is that still the case?
Yeah, that's right. And it's pretty consistent with where we were last year, despite picking up an extra quarter, in part because of that IEEPA refund we recorded in the first quarter. We haven't updated our cash forecast. We're not certain as to exactly when we'll get that refund back, but we're working through the process to make sure that we can get that. The tariff dynamic remains somewhat fluid, as we saw last night. The new tariffs that were announced don't affect autos under 232. We expect a minimal impact from that, but we're optimistic that the administration can come to a resolution and get final resolution on USMCA or bilateral deals with Mexico and Canada. I think that's really important, but we've managed to shrug off some of that uncertainty and just go in and try to find the savings and the productivity and the retail side that are allowing us to continue to print these results.
USMCA is no longer a long-term deal. It's something that has to be renewed annually. When you hear about the tensions that are kind of stepping up between the United States and Canada, particularly with what the administration is choosing to kind of put out now to say it's going to be tariffing some Canadian products, some additional tariffs on them, does that concern you? I was looking through production. I know you're heavily focused in the United States and Mexico, but something like 13% of your full-size pickup trucks, Silverados and Sierras, are produced in Canada. What would it mean if USMCA was not renewed?
Well, I think it's important that the sides come to an agreement. I think trades between the U.S., Canada, and Mexico is critically important for us to be competitive throughout the world. And, I think autos are a big piece of that. So we're confident that the governments will be able to work through it. We hope that can be done quickly without a lot of retaliation, because that volatility just creates some noise for us. But overall, we think it's really consistent. Again, we don't expect any material impact from the announcement last night, and we're optimistic that all sides will be able to come together.
Paul, GM shares, I think they trade at less than 6 times 2026 anticipated earnings. That is kind of surprising. Why do you think that is? Well,
I think we've been at this for a little while here in terms of delivering the consistent performance, the focus on margin, returning to 8 to 10% margin, returning capital to shareholders under our capital allocation policy, and that's been working. I mean, we've seen the stock more than double over the last couple of years, but there's still, quite a bargain, not just on a PE basis, but also on a free cash flow yield basis. And so, we're continuing to invest in the business. We've got one of the strongest balance sheets in our history, and we're returning a lot of cash to shareholders. We bought back $2 billion worth of stock in the second quarter, almost $3 billion for the first half of the year, which is slightly ahead of our pace of last year. And since 2023, we've retired over 35% of our fully diluted shares. So we're going to continue to do that. We think the stock is a great bargain when you look at the cash generation of the company and the consistency of our results. And we're going to just continue to book quarter after quarter and be optimistic that it's going to turn around.